Yeah, hello guys. In this video, I want to show you exactly how I execute my trade sometimes, and why I use this model is when I'm not on seat, or when I don't want to actually take time being on chart, or stick to my chart, or stick to my trading desk. So maybe when I'm busy, so this is when I use this strategy, and I hope it will also help you. It's a very simple strategy. As I said in my last video, once you understand the structure, you understand the structure high and the structure low, then every other thing is going to be easy for you. So I understand that a lot of people have challenges when it comes to taking a trade, like taking their trade. So, but in this video, I will explain how you can actually execute your trade without having much issue to deal with. So let's go into it. So in this video, what we will have to take note is, one, we need to take note of a structure, BOS, break of structure, the one that is valid. Two, we need our IDM. Once you identify your IDM, the valid one, then three, 75%, 75% fib. This is all you need, Fibonacci. So once you have these three, then you are good to go. You don't need to look for any POI. You don't need to look for it's only if you're looking for one pip, two pip sniper entry. But this kind of setup will guarantee you at least ratio 1 to 3 anytime it comes to your zone. So, and you don't need to even stress yourself. This USD card in 1 hour, I will explain what you need. Then um I've not tried this. Not that I don't. I've not tried it. I don't use it on 5 minutes. I actually use this setup on 1 hour, and it's only 1 hour. No lower time frame execution confirmation. Sorry. So what we need is this. As I said, let me take that stuff back. As I said, on this, I think I closed this stuff. Okay, not this one. Sorry. So let me explain something for you here. This all we need. We want to see the market that is trending like this, that is giving us commitments to one direction. So first thing, we want to see a trending market to one direction. So by finding this, look at this. In this structure now, we want to see IDM, IDM, this is our IDM taken out. And you see immediately market take out this high, it break this low. Then we have valid break of structure. It means that this high will be protected. Let me remove this. It means that this high will be protected. So it means that this high will be protected. Now we have another IDM here like this. So and market come back for it and break this low. We have another valid IDM break of structure. Now it means that this high must be protected according to. So now what will happen in a scenario that we don't have valid IDM? What we do is we wait for market to create IDM. So if market creates IDM like this, then we wait for that market to come back and take out that IDM, then break down again. So now we have another break of structure. So this is just to explain the structure. Then this high will now be the new high that must be protected. So and the process will continue. So this happen in a trending market, market that is moving either in one direction up or down. So that's what we mean by trending market. So now, now that you understand the range and the low, all you need to do is, as I explained, we need break of structure, we need inducement, and we need 75 Fibonacci. So now let's say this is the situation here. What are we having? We are having our inducement here. We have our high that must be protected here. If markets come like this and break down, it means that this inducement will be shifted to this level, because at the first attempt market refused to come there. This high still remain intact. Then we now wait for this to happen. We want to see this to happen. Immediately market take out this inducement, it means that our low has been confirmed. Then what are we going to do to get our entry? We come back to this. Then we wait for market to get to 75% Fibonacci, place our limit order here, then target 1 to 3 straight. So if market get to this level, mitigate us, then drop, fine. So but if it doesn't, let's say market stop here and drop, we don't have problem with that. What we need to do is to do what? To reposition again. What are we going to look for? This is going to be our high that will be protected, and we wait for what? We wait for our inducement to be created. So once the market creates our inducement like this, it means that we have inducement here. So what are we going to do again? We carry our, okay, we wait for market to take out this inducement like this. So immediately markets take out this inducement, either with close candle or sweep inducement like this one. Then we go to our Fibonacci, we draw it from here that the structure started to the low that the structure confirmed to be our low. Then we put what? We put our 75% Fibonacci here, our 75% Fibonacci entry. Then we target 1 to 3. So it's that simple. So in this scenario, if market come here and mitigate our 75, play around, you don't need to worry about that, then drop. So this is the type of entry that we're actually looking for. This is exactly what we are looking for in the market. Any situation that happen, let's say this is our inducement like this, our inducement, and market mitigate our take out our inducement, and we draw our Fibonacci, and market refuse to come to our 75 and drop. We don't need to go after it, we leave it. Market has formed another structure here for us, so we reposition again, then we repeat the same process. So that's it. That's all you need in this market. If you can stick to this thing, trust me. But you have to understand some things, that you will miss some trade, you will lose some trade, and you will win some trade. So that's where the risk to reward comes in, 1 to 3. So if you do this thing 3 times, let's say you miss one time, you lose one time, and you win one time, you will be 2% profitable. So and that's enough, depending on what you are risking, what your 2% is. Your 2% can be 50,000, can be 100, can be 5, can be $100, $200. So let me go straight to the video. After this explanation, let me show you what I have on my chart. This card, USD card. So look at this. Market was kind of bearish. Sure you understand. This strategy work well when market is trending bearish, but understand that when the market is bearish, it doesn't mean that we won't have temporary bullish along the line, because market is not only respecting our time frame, it will also respect, it can be temporary bullish, maybe a structure to the up, in 1 hour, but it might not be a structure to the up in daily or in 4 hours. But nevertheless, let's dive into the real chart. So as you can see, market break structure here. This break of structure was confirmed after market close above this. This first sweep is not a break of structure until market close here. That's why we confirm it here. So, and you see, markets give us low here, and we have a low at this level. This is our low, and you see, market coil up, coil up, coil up, came back. This was our IDM. This level was our IDM, but market was unable to come and pick this IDM, and it created another one and sweep this side. So it shifts our IDM to this level. Anywhere I put highs, I mean IDM. So you see, so we shift this IDM to this level, and you can see market actually come out. So after market sweep this level and took out this IDM, according to what I explained, what are we supposed to do? Go and look for Fibonacci. Take it from the low to the high, then drag it like this, then come for 75% entry. Put your stop loss below this structure. Target 1 to 3. So you see that in this case now, we did what? We actually had almost we had almost 1 to 2, 1 to 2.5, but our target is 1 to 3. So probably maybe this one will hit our break even, because anything above 2%, ratio 1 to 2, I actually manage my trade by putting it on break even. So I'll let even assume that we did not break even because it's not part of our rules, and we later add a SL. So we had one loss here. And what happened? Market change character. So when market change character, what are we supposed to do? We're supposed to first have, look at this. This is supposed to first be, after this change of character, sorry, after this change of character like this, at this level, this is supposed to be our first inducement, but because market created another something like this, so this now serves as our inducement, this level that I put IDM. So it means that we will take our what? When market take out this IDM, we're expecting to do what? To take our Fibonacci from this high to this low, because this is our last level that the market create as high, and we will be what? We will be waiting for our entry here, and target what? And target 1 to 3 like this. But as you can see, market refused to come to that level, so we count this as a missed trade because market do not come to that level. But immediately this happened, market mitigate this level, took out this. Okay, this is supposed to be our inducement. Yes. So immediately this structure confirmed here by market closing below like this. You see that this is our structure high. So now in this case, market, we had a, let me move this. This is a mystery. Okay, let me remove this, a mystery. So you can see that when market break this, when market broke this level, when market broke this level, market did what? Market create, after breaking this level, we created a pullback like this and drop. Create pullback, then drop. So it means that, okay, when you now got to this level, it creates more pullback and drop. So it means that our inducement will be the last pullback that the market created. This last pullback, I've already marked it as high. If it's not clear, you can see this last pullback that the market created. So, and as you can see, I marked it, and after market took this level out, what are we supposed to do? We're supposed to carry our Fibonacci from where? From this high to this low. So this will be our second trade. Then we take it here and we drag it like this. So, and as you can see, market, we are to enter at 75% pullback, put our stop loss here, then target what? Target 1 to 3. As you can see, let me remove this. As you can see, market did what? Market actually hit our TP. Look at it. So we had a win trade on this one because look at it, market finally hits the TP. So we had the first win. Then we position again. After the break of structure here, we identify our inducement. Where is our inducement? Look at this. When market was coming down, market push down, push up, push down, push up, then break structure. And I said the last pullback before the structure break serve as an inducement. And as you can see, market actually came back to this level. So in this situation now, what are we going to do after market took out this high, this inducement? What are we going to do? We're supposed to carry our Fibonacci and come here and drag to this low and be waiting here. So look at this. We had a what? A missed trade again because market refused to come there. So we cancel this. We are not going to take this as a trade. So what next? We eliminate this one. So it means that our structure high will be here now. So market must protect this high. So and what happened after that? Look at what happened. Market actually did what? Market, let me show you how market is. Look at this. Market push down, push up, push down, push up a little bit, then push down, then push up, then push down like this. So you see, this is the major push up. This is the minor. This one is not even, it's inside this big push down. So this serves as our major IDM like this. So look at this. This is our major IDM. So market must do what? Market must respect, must take out that level. So immediately market took out this IDM. What are we supposed to do? Once the market, look at this. Sorry, let me, let me show you something. Look at this. This our IDM like this. This is the IDM. So as you can see, immediately market took out this level, either we sweep or with body candle close above. We don't care. We just go straight to our Fibonacci, take from our high to the low that the market confirmed to us, and do what? Take a trade at 75% Fibonacci. Look at this. So first attempt, second attempt, this is the third attempt now. So look at this. We target 1, 2, 3 straight down, straight to TP. So on to the next trade. After we had a break of structure, we do what? Let me show you how we were able to find this inducement. So market was calling down. This is the pullback, then created another one like this, then pushed out. Immediately market took out this high like this. What are we going to do? We carry our Fibonacci again. We do this from here, from this high to this low. We'll be waiting here. But unfortunately, remember I said we will definitely miss some trade, and it's normal. Unfortunately, market do not come here, so we are not going to take this trade. So this will serve as our new high here. So but market take out this inducement, mitigate this level and drop. So it means that our new high will be here. And as you see, we will be making an attempt because markets came back after we break the structure valid here. Market created small pullback and gave us inducements here. So what are we going to do immediately? Markets take out the inducement. We will take another trade by taking our Fibonacci from this high to this low that took out this inducement, and we'll be what? We'll be waiting to sell for here. Remember I said you are not immune from stop loss, so you definitely lose some trade, win some trade, and miss some. So it's normal. So we will have this as our what? As our lose trade, stop loss hit. So now what will happen after we had this kind of situation here? Market gave us change of character. It means that after change of character here, it means the market momentum is telling us that I'm shifting from bearish to bullish, either temporary or long time, I don't know. So but this is what the market is doing. So you see, when market push break change character, market pull back, then start giving us coiling. Market never gave us structure until we got to this level. Market took out this low and push up. So because we were able to push out this low, take out this low, break this level, this is supposed to be a valid break of structure, but because we don't have inducement, so we have to use this low as an inducement. So you can see, so that's why we use this low, and market came back for it, and boom. So in this case now, we are not going to be able to take a trade here, because if we pull Fibonacci from this low to this side, we'll be waiting for an entry here, but market refused to come there. So that's exactly what we are doing here. So look at this, market break structure here, and we had another break of structure, and after that, the market created IDM by impulse correction, and boom. So this level serve as our IDM. And what are we going to do immediately market took out this low? We're supposed to do what? Look for change of Fibonacci. Then we'll take a trade from here, and probably will be stopped out. So which is fine. So look at this. We'll be stopped out because we'll be targeting 1 to 3. So this is another loose trade. So and markets this this was not a change of character, because it was a sweep, so it can be as external liquidity sweep, but at the end of the day, market confirmed the change of character after breaking down below this sweep. So then it means that we are ranging from here to whenever market confirm the low. So when the break of structure happen, you can see, let me show you, when the break of structure happen, you can see that this is the last pullback that the market did. So we mark this level as our inducement after market, and then this low will be our confirmed low. So, and what are we going to do from here to this low? Then boom, 75%. You see how market kiss our 75%, put our entry above here a little bit, then target our 1 to 3. See how this see how you can see how we had a successful trade in this one. 75% stop loss above, then boom, straight down. So you can see, despite the fact that we are winning or we are losing, you will see that now this is the current situation. So after that, market refused to, this is our first inducement, then market refused to take it out. This is not valid because all this pullback is inside one candle and the same thing here, so no valid pullback there. So but market make another attempt. After market did this, market make another attempt, but refuse to take out, come above here, take out our IDM, then collapse, then do the same thing, then collapse. So in this situation now, first attempt after market break this low, this will serve as our IDM. Second attempt, market was unable to go and take out our IDM, then boom, we come down, then this level will serve as our IDM. So as it is now, what are we going to be looking for? We are going to look for Fibonacci from here to here. Then we'll be waiting for what? For here. If market eventually come here, then we are going to do what? We are going to sell this market to this level. So let's check how many trades are we able to take. Look at this. We'll be able to take one win, one win, two win, three win. So you see that we had three wins now. Three win, three win. Then this 9%. 9%. This three win. How many loss do we have? We have loss here, one L, one SL, two SL, three SL. Yes, we have three SL. So you see, we have 3 SL like this, 3 loss, 3 L, then minus 3. So at the end of the day, we will still be what? We will still be plus, what? Plus 6 overall, plus 6%. I don't know if you get. So you guys can see that at the end of the day, we still had a very good outcome after taking how many trade? How many trade? 1, 2, 3, 4, 5, 6. So in this one now, we took 6 trade, win 3, lose 3. So you can see that this is less stressful and it's very, very direct. All you need to know is just the structure mapping. So that's it for now, guys. If you have any other question, you can ask me. You can watch the video over and over again. All you need is just the structural range, then take 50%, 75% Fibonacci, then let the market do its things. You will miss trade, you will lose trade, and you will win some, but at the end of the day, you will be profitable. So that's it, guys. Bye for now.